Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Darren Innes, Head of Anti-Money Laundering Technology at Nasdaq, to discuss the scale of anti-money laundering activities and how Nasdaq provides solutions to fight it. Darren, it's great to have you with us. Welcome to Trade Talks.
Thank you. Nice to be here.
You launched a new product in the anti-money laundering space today. What can you tell us about the new offering?
So the offering is really looking at an area of investigations where we've not focused, or typically technology is not focused. The cost of fighting financial crime for banks is enormous. Estimates from 35 billion to 50 billion a year is spent fighting financial crime, and a large part of that is operations. So that there's money spent on technology, but there's 3 times as much spent on operations as there is actually on the technology. Which means banks have a problem. It means they've got very high operational costs. And following these processes can actually affect your ability to identify financial crime. So what we do is we've started to look at ways to automate that process. So currently we are able to automate the investigation process once alerts or once risks have been identified by what we call a transaction monitoring system. Typically, an analyst will take anywhere from 45 minutes to an hour to do this. We do it in seconds. And if a bank has got several thousand of alerts a day, or 50,000 alerts a month, which is a very normal number of alerts, we can deal with that in seconds. Where if you work it out on 25,000 alerts, you're looking at a team of analysts exceeding 250, which is a significant cost.
Yeah, it certainly is. That's a surprising number. I did not realize that they get that many alerts each day, and that's just one bank. So if you look at a typical investigation, can you describe for the audience where this solution would sit?
Yeah, so if you imagine the alerts come out of the transaction monitoring system, and then a bank typically has various categories of analysts. They have what's called level 1, typically, which are those analysts that take a review of each alert and see if it's worth investigating further or it's a false positive. And 95% of what they look at typically is a false positive. So 95% of what they look at is a dead end. We automate that process. So at the level 1 analyst, we clear those false positives. We provide a fully readable or human readable report and all supporting evidence to do that. Once that's been done, whether it's an analyst or our machine, that typically, if it needs further investigation, it will go to level 2, level 3 analysts, which are very much more experienced, and they start to really dig into the detail and potentially give us a suspicious activity report to the regulator or to whichever crime organization is looking after it. But what we do, once we've done the level 1, we can provide all the supporting evidence that a level 2 analyst needs to make their review quicker. And also then that obviously goes with the level 3. So we believe we can take out more than 40% of the operational cost banks are dealing with today when they deal with an investigation.
So in addition to the cost savings, can you explain which gaps you believe that you're solving in the current investigations process?
Yeah, another one is obviously standardization. If you've got a large team of people, or in fact, if you give one person the same problem 8 times, they will tackle it differently at least 1 out of those 8 times. So when you've got lots of people doing that problem becomes even bigger. So banks have issues with trying to ensure that their global standards are maintained through these analyst reviews. So we eliminate that as a problem as well. And that is kind of, it's made even bigger when the teams are globally dispersed. But we solve that standardization issue. We also solve the need to bring in large, costly remediation projects. And to give you an example, during COVID, there has been a spike in alerts, right? And the reason there's a spike in alerts is because one of the things that you look at when you're doing monitoring is changes in behavior. Well, of course, everybody's behavior has changed during COVID. Another issue that's caused that backlog in COVID is a number of banks have very large centralized investigation teams in one building, right? So it's almost like it's a COVID breeding ground in a way. So when countries have locked down and they've had to disperse those people, there have been issues trying to get their investigators access to the bank systems to carry on doing those reviews. So that, again, has added to the backlog. Now, a machine doesn't get sick, right? A machine doesn't need to worry about a virus. So because we can analyze the alerts all of the time, we kind of avoid a large chunk of that backlog, which means banks don't have those costly remediation projects. They don't need to hire outside consultants to come in and do that work. So we actually help them in that way as well. So those are kind of the three areas that we work. Obviously, cost, standardization, and we can avoid backlog or reduce the amount of backlog a bank will face.
Yeah, it's really interesting to hear that COVID-19 actually impacts this area as well. I mean, we think of the obvious areas in the economy, like the consumer and retail and so forth, but to hear that anti-money laundering is also impacted is really interesting, which brings me to my next question. What's the scale of anti-money laundering? And you discussed it with the banks, but just how big do you think it is?
You're going to be surprised because it's huge. So a recent report by the Financial Crime News estimated at 4.4 trillion a year, which is what, 5% of global GDP or something similar, which is horrendous. But it's not really the amount of money laundering that matters. It's how they drive the proceeds of crime. It's the crimes and the fact of or the kind of difficulties people are put into because of them. When you look at the top 10 crimes in money laundering, you've got things like drugs, and drugs obviously cause pain to people. It's something like a $450 to $600 billion problem every year. You've got fraud, and fraud obviously is a massive issue to people, certainly when you're affected by it. But then you've got some really nasty ones like human trafficking. And as part of human trafficking, you've got child exploitation. And going back to COVID, one of the areas where we've seen a significant increase since COVID is very much that human trafficking and child exploitation area. In fact, I was on a call with the Financial Action Task Force, or listening to a call by the Financial Action Task Force, and they indicated that child exploitation has gone up massively, which is quite sad.
It's really hard to wrap your head around that. So, Darren, to wrap up here, the anti-money laundering solutions ecosystem is certainly new for Nasdaq. Why does Nasdaq want to get into this space?
So Nasdaq's been in the fight against financial crime for a very long time. We provide surveillance, looking at market manipulation and abuse to, I think it's 169 banks and 60 exchanges and regulators around the world. So we do take the prevention of crime and the kind of market stability very, very importantly. Because of this, we think we're obligated to move into other areas of financial crime and take the success we've had in one area and start to transpose it into other areas like money laundering. We also think that the money laundering market is slightly underserved. There are major gaps in the way banks have to deal with this today. There's some great technology in certain areas, but in areas like investigation, it's been missed. And we think we can add real value to that.
All right, Darren, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.